The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down to 395. Nasdaq's up 57. S&Ps are off 34. Gold contract flat. $18.88 an ounce. You get silver down 16 cents, $24.63 an ounce. Light sweet crude off 29 cents, $41.05 a barrel. Notes and bonds. 10-year note up 7 ticks right now, 138.08. 30-year is up 25 ticks at 172.22. And King Dollar. King Dollar is down 240 ticks, 92.402. Euros at 118. Yen is at 104.12. And the British pound's at 132 to 1 US dollar. Tom O'Brien, what's going on?
Man, we got a lot going on in this market, especially in that retail sector. How about Home Depot? How about Walmart? How about Amazon getting into the prescription business, right? There was too much to cover in that update, man. We got too much going on today.
Big numbers. There's no doubt about it. You know, the Home Depot, blasted through some numbers. No doubt about that.
Can we jump to Home Depot? Yeah. 24.6% same-store sales. How about a net sales rise of 23%, man? 24.6%. You think they were doing okay in November 2019? I think they were probably doing all right, and they just crush it. But Home Depot, it's priced in, man. It's remarkable, down 2.5% on numbers like that.
Right. It's interesting how it's priced in, right?
It certainly is.
And Amazon, folks, bottom line is that they're going to, they bought Pillbox. Is that Pillbox?
Yeah, PillPack, and it was 2 years ago now. I can't believe it that they bought them.
Right.
Yeah.
And now they're going to get some transparency in the drug business. And let me tell you something.
I like that. Yeah.
My take is that you're going to see Amazon's going to eat this thing alive, particularly because it's not you and I going down to get one prescription, folks. The prescription, where the money is in the prescription business, is that there's so many people on drugs that they get them delivered every 20 months.
Yeah.
And that's where the big money is. And I can see them taking that pretty easy. I mean,
people on, whether it's, blood pressure medication for decades, right?
Exactly.
Something like
exactly. And it's going to be on your main page. You're going to go up, you hit the button. It's a once deal, and then you're off to the races, man.
You just speak in the air. You say, Alexa, give me my medication.
Exactly. No,
and the little drone comes over and drops it in your mouth.
And the cool thing that I think they're going to get this transparent, and that is what's going to really wreck those other businesses.
If you've ever seen GoodRx, I've been around people who have used it. The savings are insanity of what happens. And I think what happens there is they're able to provide these cash discount type deals. And so sometimes on insurance, the charge is whatever. And then on GoodRx, they're able to get it like $25, $30, something silly on a cash basis, not even using insurance. So you're going to see some of these types of discrepancies.
Wow.
I think that's, and you're seeing GoodRx is down a lot today. They're all down a lot. Anybody in the prescription drug business is down today because Amazon's in the player.
I've never even heard of this thing. GoodRx. Where?
Yeah, I don't know what is the symbol.
Here it is. I got it right here. Okay. So.
Yeah, down 14% today. They're one of the biggest ones hit. You go to their website and they have coupons that you can show up to the pharmacy with, and some of them are pretty dramatic savings.
Yeah, which would totally make sense. I mean,
I've always wondered, like, how's that work? Where do they come up with these?
Exactly, because it's
savings.
It's a total ripoff, man.
And that company has kind of found a way to weave into kind of some of those same deals. I think I'm lost even explaining it, right? Because it is so difficult. So Amazon, hopefully they do. Yeah.
Yeah. It's when there's a third-party payer, folks, and that's the insurance companies. That's one of the best businesses you can be in. Meaning, if you're getting paid by a third party, and that's what it is. When we get insurance, the insurance companies, it's just like a hurricane coming in. And insurance companies actually love hurricanes because the bottom line is that then they can up the rate so dramatically, so quick. And as you get to higher numbers, you got to remember something that they're always dealing with a percentage of the numbers that they're making on profit. So great, you pay $100 for something, you're making 5%, $5, right? You pay $1,000, it's $50. So they all want to see higher rates.
I was just going to mention that pill pack, which is pretty cool the way they do it, right? They ship you, and I believe everything is packaged for the day of the week. So it's specifically designed exactly for that, where you're taking, a bunch of meds, Monday, Tuesday, Wednesday, Thursday, Friday. So instead of having to go through 5 different bottles, did I take that one? Did I take this one? They literally have a pill pack, that has the vitamins, the drugs that you're supposed to be taking on that day. But for people who are on multiple drugs, who are taking drugs on a daily basis, in continuity, you can see how all of it combines to be pretty powerful for Amazon.
It's important. Those pill packs are very important.
We've all done it, man. You go to I got a headache. Wait, did I take Tylenol or did I not take Tylenol? Did I just take that? I don't know. Imagine if you're doing it every day. No, it's
Yeah, and
everybody knows, man. You know what I'm talking about.
No, I do. I'm laughing because it's really that's after a hard night. Those pill packs are for people, just like you're taking a lot of drugs, but, as people are getting older, they start getting forgetful, too. Just like you said, did I take it? And that's dangerous if they did take it twice. You know what I mean? Right. So those are very,
That's it. You combine the two of them, and you can see how much revenue is probably possible in that arena, man. Pretty explosive.
Forget it, man. Forget it. We go take a look at some of the higher volume equities out here in this market. And I suspect we're going to have a low-volume market out here today. Tesla's the big one. Oh, let's talk about Tesla. This is a trip, right?
Let's talk about Tesla, right? Why not? 10%. Why not? Pop, right on the open, man.
Tesla's so big. So the next shoe to drop off, folks, is going to be who gets kicked out of the S&P. Because
yes, they have not mentioned that yet, right?
Exactly.
I know.
There's going to be a huge amount of speculation as to what that is, and the probability there must be pretty hard. I mean, it's to get 500 stocks, who's going to get canned? But Tesla's so big, they were almost thinking that they'd do it a half and a half.
Yes, right, because it's so much more. That's part of. So Bloomberg, I talked about in my program, right, in terms of the size poses unprecedented challenges for S&P 500 entry when you talk about these tracking funds. So it's $11 trillion. Where is it in this article? There it is. $11 trillion of investment assets are tied or benchmarked to the S&P 500. That's a lot of assets, man. They got to plow into. You're talking about Tesla. I believe it was 390. Was it last night? Could you pull up their market cap on the description? Because that all matters, as in there's no company they can just pull out that's a very simple shift, as usually would be the case sometimes. $425 billion of market cap they're going to need to find. So it's going to be a lot of stocks that, and check this out, it's going to be equal to the combined value of the 60 smallest stocks in the benchmark combined.
Oh. Yeah, that means that the S&P is going to almost stop being like the NDX 100 because we got Apple in them. This is
it already almost is. These heat maps, when you put it on, let me just pull it up, man, because it's pretty stark. You can already see it. S&P 500. That map is controlled by 10 to 15 companies, just ballparking it by eye, right? Amazon, Google, Facebook, Apple, Microsoft, Visa, HD.
Wow.
You're going to see Tesla in there pretty soon, too. Look at Facebook. Their market cap 781, so Tesla's going to be about half the size that Facebook showing up in here, right? 450 billion. They're going to be quite a square right from the get-go.
No doubt. Yeah. Dow Industrial's down 327. Nasdaq is off 36. S&P's down 28. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials down at 324. You get the Nasdaq off 41. S&P's down at 28. Once you get going out here, I mean, the Dow gave everything back that it had yesterday. We'll see how this is going to shake out at the end of the day. The inside the Dow Industrials right now, let's see. So you got Home Depot minus 52 points, United Health 35, Honeywell 30. The only real mock putting positive into the Dow right now is you get Salesforce putting 31 points, Merck putting 8. So
what's going on with Salesforce? Can we jump over to them? So they're a strong company, man. I've talked about them before. I have a little bit of Salesforce. I'd like to have some more Salesforce. Just a Dow stock, man, with cloud exposure is pretty cool when you combine things, right? In terms of
it is, and it's not that expensive. I mean, I haven't got it now. We had 5 of those units.
You're talking about their actual service, not the stock, right?
We had 5 of them 10 years ago.
Okay, accounts or whatever.
I didn't use it enough, but it's a great system, man. I mean, it's a subscription. Well, the one we had was a subscription reminder system, basically. Software
as a service, man. They were one of the first ones out there doing that. And we had some trades in the newsletter. I remember, I think last earnings call when this thing blew out of the water. Either way, I was particularly interested. I'm trying to refresh my memory, but I was listening to the earnings call. And they delivered in monumental ways, and every analyst almost kicked things off with the congratulations on the quarter, just amazing, organic growth, et cetera. You went from basically 210 up to almost 280, if people recall, and that was after the news that they were coming into the Dow when you were at 190 before that. So anywhere you're getting this, towards the lower end of this bar when it started accelerating, and that's you're talking about 250. It's an area where long-term, man, there's a lot of real fundamentals behind where that company opened on August 26th after their earnings, and you have the numbers up there.
Yeah. 5 years ago, they took in $6.7 billion. This year, $20 billion. They're growing.
Look at those growth rates.
Right? Exactly. Yeah. They're growing by 24 to 35%, folks. It's absolutely amazing. Hey, you had some nice trades here this morning.
Yeah, we'll see how they work out, man. They are still up in the air, but we had all the players, Walmart, Home Depot, and Kohl's.
Yep.
Kohl's right now, it's coming close. You're going to see the order on my screen. I think, whoops, not KISS, KSS is theirs. Up 3.2%. And so we had a bull call spread. Usually you want to be the one absorbing the premium, right? Especially when you're going into it. This is one of the trades we went for a bull call spread. You have till Friday, and we have from 26.50 till 31. Okay.
Yeah.
And the stock was trading at about 26 yesterday. I'll put in a 5-minute when we put this on. 26, give or take. Taking a little bit of a flyer, right? It's out of the money. And I think that was about $1.15 that cost us. So your break even becomes $27.65 approximately. And I said, to subscribers, say, listen, it's lower, but put your order in, and that's where mine's showing up. It doesn't look at how close we got to that, and that's a break even because things not. You're looking for these things to accelerate when you're making these out of the money.
Right.
I'm saying, you know what? We'll just take it off the table if we happen to get it back up there. We have 3 more days of action. But Kohl's numbers. The big one that struck out at me, number one, they earned a cent versus losing money. How is Kohl's not losing money right now, man? Yeah. I have not been to a Kohl's since lockdown, and I did a lot of Christmas shopping last year in a Kohl's, actually. At the mall, right, stuff like that. And they also are going to start giving their dividend. Kohl's is going to give their dividend reinstate it in the first half of 2021. I'm making a volatility play here, but there's enough in these earnings to say, you know what, it could spike higher, right? And so you're seeing an appreciation. We'll see what happens. And then the other two was kind of what we were talking about in terms of just so much priced in. Now, Walmart, I love Walmart. I have Walmart in retirement. But no matter what this company did, I said, man, how high can you really go? So I don't want to be the one paying for premium here, right? So I said, what I'm going to do is we sold a put spread. All right, so we're going to absorb premium. It's a bullish trade. We don't want it to go south, but we think that even if it comes in with strong numbers, it might not accelerate higher. And that's kind of what's happened. We'll see. It's got to stay. That was 147 to 146. So we were risking about 80 cents to make 20 cents, give or take, but that looks to be a nice trade by Friday. And then Home Depot, we'll see this one as well. And this was kind of a trade where, again, so much good priced into these stocks, man, that you're just seeing it trail off. And I just mentioned Home Depot has 24.6% same-store sales growth, man, and you're down 3% today.
Yeah.
How does that, but Home Depot in particular, man, if we have rising yields, right, if we have the economy opening back up, these were some of the scenarios just as people wrap their brain around. Everything can't go up all the time. So some stocks went up during restrictions because they benefited. It's real easy. Home Depot, Lowe's, it makes perfect sense, right? Well, when the airlines all accelerate higher and, all of those stocks, they got pummeled because everything's been shut down. Why is Home Depot? Now, the housing market adds into it, but you might get some higher yields too. So why is everybody redoing their home during restrictions, but then when the vaccine comes in, you don't see these stocks pull back at all?
Right. Well, and on top of that, as you're redoing your home, there's only so many homes to redo, man.
Yes, exactly.
So at some point, a lot of the homes are going to be redone.
So in this one, it was a call spread. Let me see if I have I do have, let me just pull it up real quick. Yeah, so it's, yes, so there's the call spread. Thinking that no matter what Home Depot does, man, it's going to be really hard to accelerate higher in this environment for the week. So we sell a call spread from 285 to 287.5, right? We absorb about 47 cents of credit, really is where that came in. You're risking $200 of loss if it makes it all the way up to 287.50, but that looks like a nice trade as you're trading at 271. And then the one real quick that we had on Walmart. Yes, and there's Walmart. So we absorbed like a 23-cent credit selling the put spread as long as it stays above 147. So just some ways,
which
because,
is pretty cool. I mean,
I have a lot of directional biases on these stocks, right? But you don't always want to be the one paying the premium, man, because, I'm bullish Walmart. I'm even bullish Home Depot, man, but I'm not bullish Home Depot on a huge acceleration on their earnings. Like earnings and prices are about the future, right? Home Depot's had a heck of a run over the last 7 months, man. They just might need to relax a little bit as the economy opens back up. People aren't doing the home renovation projects as much. Yields might be rising a bit. That's going to put a little bit of a headwind. Long term, Home Depot, Lowe's, great companies, man. You know,
they're not going away.
No, they just got to chill out for a few months while everybody goes outside and parties and travels. You know, I'm serious.
Yeah, building some cars because then you'll spend money on different things. We all only have so much money that you're going to spend, right?
And in general, I think there's a long-term change of staying at home more. You know, so they've benefited. It'll be there. There's going to be a pause on that when we all go celebrate when we get over this. But people enjoy their home. They enjoy building it out. They enjoy, working from a second office, all that stuff. That's here to stay for sure.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow's off 305. NASDAQ is down 33. S&P's up 25. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 319. You get down 319. NASDAQ's up 40. S&P's off 28. Now this gets interesting. Look at this GDX. So the GDX, folks. Now this is okay. So this is the Van Eck Gold. I want to look at this for a second. So this is like a swap off. This is interesting. Hedge funds added more shares of the iShares Gold Trust to their ETF investment than any other exchange-traded fund in the third quarter, and sold the Van Eck Gold Miners ETF. So what you had here, folks, is this. If anyone knows I got to get the symbol for the iShares Gold Trust. Because this is what you have here. Now, this is intriguing in the context that when they're doing this for a long period of time, folks, because I believe the iShares, when we pull it up, has a much lower fee structure than the GDX. So look at this number. They increased iShares Gold Trust shares by 49% to 46.3 million with a market value of 832. And then they reduced, thanks, Tommy, then they reduced the Gold Vectors Mining ETF by 43% to 12 million. Isn't that wild, man?
Yeah.
So in here, so let's do this. So on this one here, because if you're trading in and out of these, it's not a big deal, but the expense ratio is a big deal if you're going to hold on to them. Okay, so this is 0.5%, 0.52% in the GDX. IAU, this is going to be really low. Half the expense ratio, 0.25. There you go. That's bullish for gold, folks, because that's saying that those funds are going in there for a long period of time, you know, and they swapped that out from basically a trade to, that's how I'd read it anyway, just because of the aspect if you're going to pay, you want to pay 1/4 of 1%, or you want to pay 1/2 of 1%, right?
Yeah. Yeah, I mean, those fees, when you start compounding, the key is the compounding of those fees.
Right. Right.
You know, especially when you look at retirement. That's why Fidelity makes so much money, man. Fidelity Wealth Management, right? You're talking about 1.5%. Man, you run that up, $500,000, right? You're talking about $500 to $7,500 every single year, man. At 1 to 1.5%, even in losing years, right? That's right. That's where you start really.
And then when you get winning years, what ends up happening is that you're not even putting more money into the fund, but more money is coming out of the fund.
Exactly.
Yeah, out of your account anyway. Yeah, right.
Yeah, the fees are compounding as well.
Yeah, exactly. Yeah. Pretty wild, man.
Yeah. So we got Target tomorrow before the bell. We had Walmart, Home Depot, Kohl's. We got Target. I think we got TJ Maxx as well. But Target trading a little bit lower, maybe on the Walmart numbers. Wasn't sure. They're getting a little bit of a pop on the open. Target's been even stronger than Walmart during all of this, man.
Yeah, they're going to look. They're looking for $20.7 billion and bringing $1.60 to the bottom line.
It's interesting. They got 22.7 last quarter, and they're at 20 this quarter.
Yeah, right. And then, well,
I guess that was just the rush during the restrictions, probably that initial rush of orders of everybody, or I'm not sure.
And then next quarter, $25 billion. Well, did you also see that I guess the retail sales number? I mean, this is the first time that it actually didn't expand as much for the last 6 months. That makes sense.
Yeah, and that's probably hitting it as well. It was 0.3%, I think. I have it up here. Yeah, retail sales rose 0.3% last month. They were looking for 0.5%, and then the core number, if you take out, where are we? Gas and excluding automobiles, gas, building materials, and food services, retail sales nudged up 0.1%. And that was after a downwardly revised 0.9% in September. So, that's a pretty steep slowdown, man. And that's a slowdown as we're coming into increased restrictions across the board in these states getting hit hard, right? California, New York, we're seeing it as it continues, yeah.
It continues, all right, man. Holy cow, the numbers are through the roof.
They are.
It's pretty crazy.
It is.
We go take. Go ahead.
I was going to say gold. How about gold, man? Gold, we had that spike yesterday, and then we're just kind of sitting within $5. Quite the tight trading range on gold, man. 1890 to 1884, maybe.
It is, and this should actually be moving more because the dollar is going the right way for it. So this is going to get. We'll see where this is going to go. We take a look at that dollar. See, dollar's still not holding. It's creeping down. Let's see. So the high of the low is 92,399, and we've hit 92. Look at this. So we have actually hit the high of the low of September 1st this morning. My take is that we're going to bust that through, folks, and we've been building cars for a long period of time. And, we'll see. The European Union, I mean, they're claiming they're going to have some kind of a deal next week on Brexit. I'll believe it when I see it, but
exactly right.
Yeah.
Good luck to them. Yeah.
Yeah. I mean, that's the rap that they're giving out here this morning.
Sure. Yeah.
And you can see how the thing that's crazy, man, is that that's like the whole thing is old news now. Like, markets chew things up and just spit them out, man.
They got pushed off the front page of the presses, man.
Yeah.
With everything else going on in terms of Brexit. They're gonna have to deal with what they have to deal with because there's bigger fish to fry right now, as they say.
Yeah, there's
it's just the news cycle, man. Between the presidency, the election, and COVID, the air is full of enough right now.
There's no doubt about that.
Yeah,
big time. Let's take a look at U.S. steel. So this has always been a dog, folks, but it's basically moving. I don't know how they stay in business for so long, because they've been losing money forever. That being said, this thing's trying to launch. Let me put this closer, man. Let's see. So I'm doing a couple of years. Yeah, it's trying to launch this 1095. It got above it yesterday. We'll see whether it can do it. When you look at these numbers, it blows my mind, man. I mean, they've been in the wrong part of the steel business for a long period of time. Watch these numbers. Like, how do you stay in business when they did $10 billion in 2016 and they still lost $1.60? They're doing $10 billion, $9.5 billion this year, and they're losing $555. Right?
Yeah.
I mean, this is where financial engineering, folks, comes in an extraordinary way. I mean, if you look at these numbers, just look at these numbers. This is like, it's hard to comprehend, man. But anyway.
Yeah, I mean, you're seeing a lot. I mean, it was almost even, Kohl's, as in they turned a profit at a time when they're missing on revenue, right? I mean, so getting their costs in line, but that was an important one. Some of these companies, there's not the same as financial engineering, but it is interesting. You're seeing declining companies during COVID. A big part of this is getting your house in order, man, and being nimble to trim those costs or do what you have to do to make it out on the other side.
Yeah, no doubt. The cost structure on that side is big. Well, when you look, this is, the IBM is the deal, and watch this. So now they're down to 352,000 employees. And you can see they take in $5 billion less than 5 years ago, but yet they are making money.
They're staying strong, yeah.
And that has to do with just getting rid of costs.
Look at all those shrinking growths, yeah.
Huge. Stay right there, folks. Tommy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is up by down 282. Nasdaq is down 14. S&P is off 23. And Bitcoin, how about this, huh?
How about it, man? 17,000. I was looking. Bitcoin has not seen a 17,000 handle since December 2017, the first week that it went live on Chicago Merc futures.
That's pretty wild. I mean, from October, look at that, man. Up $7,000 since October.
Yeah.
Bring this back. Yeah, I mean, it's a straight line move again. So there's no reason at 19,500 it's not going to get challenged. You know what's so crazy about this, actually, is that when they still sell, I mean, I brought this up a couple months ago. Let's say that when you're selling a lot, there's another market when you're selling a huge amount of Bitcoins that market is like 20% lower than this market that we're looking at. So it's really intriguing that what these, people that own a lot of Bitcoins do. It's like, okay, you can ramp it up here, but try selling, 100 Bitcoins at the same time. You're going to get them at a discount. So
yeah, there's a lot of there's a big spread, right, between what you can sell it for because of the logistics, I think, that you have to go through to make that happen securely without losing your Bitcoin.
More than likely, yeah.
Yeah.
So this is going to get interesting here that you got, what's her first name? Judy Shelton. This is the Federal Reserve, folks, okay? She's a Fed nominee, and what's going to get interesting here, it looked like it was going to be a tie this morning with, so this lady's very controversial, folks. So the main reason is that she wants she at one point wrote a bunch of papers that we should go back on the gold standard. Another deal in there, though, which to me was like totally insane. She wanted to get rid of FDIC insurance. It's like, really? Can you imagine what the banks would do to us if we didn't have FDIC insurance? That's what happened in the Depression. Give the bank your money. You're never going to get it back, right?
Yeah.
I mean, the banks pay so many billions in fines. But anyway.
Private companies live and die all the time, man. So if you give your money to a company, which a bank is a private company, folks, without FDIC insurance. So, exactly.
So this morning, this is an intriguing one. This morning, if all the Democrats showed up and the Republicans, they've been trying to get this through for a year, it would be a tie, 49-49, and Pence could break the tie. But wait to hear what just happened. Republican Senator Chuck Grassley has just entered quarantine this morning. So now it's getting tighter because what happens, folks, you have to actually be on the floor in order to vote for this.
Yes.
So I'm looking at that. I'm saying to myself, he was probably smart. That's a smart way for Grassley to back out of it. And so Rick Scott went in quarantine also, by the way, folks. Because
they already knew it was Rick Scott and who was it? Lamar Alexander came out yesterday, I believe.
And that's what turned it. When Lamar
So that was
Alexander,
right.
Yeah.
So it's 51-49 because you were talking about on your show last night. So I read a big article on it. It is pretty cool. 51-49 is the makeup right now of the Senate, and then you have Rick Scott and Lamar Alexander both not going to be there. Lamar Alexander said he's against it, but he's not going to show up. So he's not going to vote against it. He's just going to be absent. And then you have Rick Scott, who is in quarantine. So that's 49-49. Pence will break the tie. So yeah, it looks like they're in problems, man. Hey.
Yeah, I don't want her there.
I think everybody picks that one up.
Well, it blows my mind getting rid of FDIC insurance. It's like if you remember, folks, now when COVID came in, this wasn't a big deal. But in 2007, 2008, I'm sure there's many Tigers and Tigresses who were changing accounts because guess what? I mean,
I was just going to say COVID should come into this though, because without FDIC insurance, what do you think would have happened? The day that shutdown started happening, there would have been a line at the banks, every single one of them, to take money out.
For sure.
If your money was not insured with a pandemic raging, for sure.
There's no doubt. And what did happen, in 2007, 2008, that did happen. I mean, people were swapping money to get it underneath that limit as fast as possible. Because the way it went, folks, is that it was $250,000 per bank. That's how this thing shook out. Do you know what I mean? So if you had it in another bank, you could swap it off. I mean, I remember that very well. Like, that was the first time I ever scrambled in my life that, oh my God, the bank's going to take my money. Yeah.
Yeah, because everybody had become pretty lax, thinking that there was no way a bank could fail.
And they were the epicenter of it. Exactly.
Yeah. Well, surprise, surprise. Right, exactly.
Yeah, right. Unreal. So you get Bitcoin, we got let's go to old General Motors doing. This will be interesting. With Tesla going in the S&P 500, that's hanging right at the highs for the last year at least. Yeah, look at this. Okay, so they made it all back pre-COVID. You know, they're basically back. Let's see. Oh, look at that! Holy cow, that's a long time. 2013. We're up at where we were in 2013. Yeah. That's wild, man. 2011. This is the thing, it hasn't gone no place. Thank God this pays some dividend. What does it pay? No, it doesn't pay a dividend. Holy cow. Not available.
Maybe they did away with that recently, I think.
Yeah, I guess so.
Trying to clean house.
That's a little problematic that stock hasn't moved in 11 years,
a
right?
decade, yeah.
Yeah, exactly. Yeah, no doubt. No doubt.
You know, it's interesting, even Apple, I'm just jumping around some of the tech stocks. NASDAQ 100's up now, right? 17 points. You have Apple trading up $1 from its open. It's almost flat right now. Yep. Amazon hanging on to gains, but Microsoft shares down about 0.2%. Pretty muted action. And then you combine Tesla up like 10% in there.
And if you trade the NDX 100, folks, that's all you have to do. I've been amazed that Apple up $1, down $1, makes a monster. Well, it makes it's like 20 ND points in a second. You know.
Yeah. The heat map for the NASDAQ 100. Yeah, you better have some action. You know, look at Tesla here. Okay, that's a huge influence right now as to why this index is up. If Tesla is not up 10%, the NASDAQ 100 is not positive though right now. Just so you know, Apple's, and it's kind of cool how everything. It's bright green because it's very in the positive, right? Versus all of these pretty marginal. Apple basically flat. Microsoft down 0.3. Amazon up 0.9. Zoom's getting a pop today, up 2.2%. PayPal's positive by 1%. Netflix is positive, but you see, it's really Tesla putting that index over the positive right now.
Yeah, no doubt. And let's just see, where are we at with Tesla here? Oh my, yeah. See that the float. I mean, the short positions come down dramatically. It's only 6.3% short position right now. Yeah.
It's a different world for Tesla than it was 1 to 2 years ago, to say the least, man, in terms of there was a chance at some point. I mean, what's the interviews he gave? At some point, they had, 90 days left of cash or so, you know, in one of those, that squeeze where they were running out of capital, They had to push the cars. They just made it over the hump, it seems like.
Yeah, they not only made it over the hump, they made it over the hump. Now they got momentum at their back, right?
Momentum, exactly.
Yeah. Dow's down 275, Nasdaq's up 14, S&P's down 21. Stay right there, folks. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down at 230. S&Ps are off 17. And, folks, as you come over to our website at TFNN, you're going to see our man, Mr. Basil Chapman. He is going to be doing an all-day workshop for you this coming Thursday. Going to start at 9 o'clock in the morning, go to 4:30 in the afternoon. Check it out right on the front page of TFNN, right under featured content. We had another question out here, Tom, about the dollar and gold, the decoupling. I'm not in that camp, folks, okay, meaning does the dollar decouple away from gold. What does happen is this, is that it seems in the gold market, this goes in huge burst. So the dollar, if dollar's lower, gold's going to be higher. Dollar's lower, commodity's going to be higher. It's consistent, and it has to do with what is the value. You got to remember, all of this bartering and money and fiat money, everything is what is one thing worth in correlation to the other, and what is the value. And if the dollar goes down, sure, the value of what we actually need is going to go up, including gold. So be interesting watching this thing shake out. I mean, if we break the 91, 88 is on the rise. And because we've been here so long, it may move that quick. And it may have to do with Brexit, because all that would have to happen is that the euro takes off topside. The dollar wouldn't even have to go down. If the euro takes off topside, it's such a large weighting structure in the dollar index. It'd smoke the dollar. So, and the pound. Forget the euro. The pound is the one that I guess would actually go with Brexit happening.
Definitely.
Or not happening. Yeah, we gotta love it, man. No doubt.
And Boris is quarantining over there, I believe, right now, for having close contact yet again. The headline yesterday was he was trying to corral dissent, right? Get things back in order, and he was in contact with somebody who tested positive, so he's got to quarantine himself.
And after he got so sick, he's not going to mess around. Yeah, no,
I hope not. Right, totally.
Stay right there, folks. We got Think of Swim coming up next. That man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.